Hello, I'm Chris Sarley, Investment Research Analyst at Fund Caliber, and today I'm delighted to be joined by Gareth Powell, Manager of the rated Polar Capital Global Healthcare Trust. Thank you for joining us today, Gareth.
Hi, Chris. Thanks for the time.
Let's just start with the outlook. You have been very positive on your views on the healthcare sector over the next 5 years or so. Could you maybe just explain to us why you feel that's the case?
Sure. So we are very constructive on the outlook for healthcare, as you say. The sector is very attractively valued both across large and mega caps and also small and mid caps. We see the potential for decent growth in the years ahead. And if you look from a historical perspective over the last 30 years or so, healthcare seems to sort of outperform for a period of 7, 8 years and then underperform for a period. And that seems to be driven by political risks in the US. And so if you look at healthcare versus the broader market, it's actually underperformed at the index level since 2015. So what we're hopeful for is there's a potential to move in the next to a more positive extended period of outperformance for healthcare, driven by the fact that we may be in an era where there is less policy risk in the US.
Okay. Obviously, short term things are, to put it politely, in something of a malaise. How do you expect the sector to perform in the short term in this environment? And is that where perhaps looking at the subsets of the sector comes into a sharper focus? You know, the sector has obviously grown a lot in the past few years.
Sure. So obviously markets are really challenging. Concerns over elevated inflation and then what central banks have done in terms of aggressively increasing interest rates. So, you know, the current environment would probably be described as stagflation, so elevated inflation and slow economic growth. That, if you look historically, has been a really good time for large cap, mega cap healthcare.
Mm-hmm.
The reason is that particularly product companies like pharmaceuticals, large biotech, medical devices, they have very strong margins, which they can use to offset cost pressures that other industries may not be so capable of dealing with. So that makes them stand out. Small and mid cap, obviously more volatile end of the spectrum, but what we're seeing is a pickup in M&A. So that's providing some support for those names. And as I said, valuations are very attractive across small caps, not just in healthcare. So we're optimistic there. Areas we like are biotech, medical devices, and certain healthcare providers as well. So we see lots of opportunity despite you know, the very bearish investor sentiment out there towards stocks with the macro concerns going on.
You mentioned the small caps there. Obviously, the portfolio is sort of two segments. You've got the growth and the innovation segments. That's going to the innovation, which is the small caps. Where are you finding opportunities in particular? Is it across the board, or are there certain parts of the small caps? And you know, are you anticipating a turnaround in the not too distant future? Maybe just go a bit deeper on that segment for us.
Sure. So we've got exposure to lots of different areas. So you know, I've talked about some of the biotech, medtech, healthcare, IT. Just to give you sort of a flavor. So we see opportunity across the board. Now, there were stocks, if I take you back to sort of when markets were really strong, 2020, post the start of the pandemic and that enormous drop in markets, all the way through to Q1 21, you had sort of early stage companies, very high growth companies, some concept type stocks. They went to incredible valuations, and it was a bubble which burst in at the end of the first quarter, or maybe a bit earlier in 2021. Those kind of stocks have come back an awful long way, but they, again, typically after a bubble, you need a time, and it can be several years for those kind of stocks to consolidate as they hopefully, their fundamentals do progress, and they kind of, you know, say in early stage biotech, they become sort of mid to late stage, and then I think, you know, they'll look interesting again. So we're avoiding those kind of companies that were in the bubble phase, but we see lots of attractive opportunities across the board in small and mid-cap stocks.
Obviously, small caps are always in the eye of the storm, and they tend to drive markets out of recessions, etc., or lead anyway. Given the valuations at the moment, I mean, you touched on it briefly earlier. Are you expecting M&A activity on this occasion to be as strong as it's ever been coming out the other side, or?
Yeah, it's always, you always sort of think you can kind of predict these M&A cycles. There's people involved in deals happening, so it's not something you actually find you can predict. I would just say what we've seen from the larger mega cap companies, which has been different for sort of the 20 years I've been investing in the space, 20 plus years, is they're very vocal about wanting to do M&A. Obviously, small mid caps have come down an awful lot, so we're attractive from a valuation perspective. But if you look ahead to, say, 2025 to 2030 in the pharmaceutical space, there are companies with revenue growth challenges. So you're starting to see companies, and there's certainly been a pickup by companies, the smaller mid-cap biotech companies, with an eye on boosting that revenue outlook in the second half of the decade. And we expect that to continue. So Pfizer, for example, has been very active and have explicitly said that they have significant ambitions on M&A to help improve that outlook by the end of the decade.
And let's just finish by looking at the trust in a broader sense again. The sort of longer term, you kind of have 6 themes in the portfolio. Could you maybe just for the viewers sort of go through each theme and explain it to us?
Yeah, maybe I'd focus on a couple of those. So one area in developed markets in healthcare, you've got the demographic trends, which are very positive for demand, but our view is that in developed markets, healthcare delivery is extremely expensive. So the amount of money spent on healthcare is at very high levels in developed market countries. The most significant is in the US, and sort of Switzerland will probably be next. The challenge you have with developed market systems is they're very much focused on these big inpatient hospital systems. And if you look at cost per day for a patient being in one of these hospitals, it's extremely expensive versus alternatives. So now what we're seeing, and COVID really accelerated this, the pandemic, hospitals were trying to manage, and people didn't really want to go into these big hospitals either. So you're seeing a shift of care to lower cost settings, and technology is really helping drive this. Telemedicine was very useful during the pandemic and has continued to be used. But we're talking about, surgery such as hips and knees moving to sort of more of an office setting, like a small, imagine it as a sort of very small hospital that can be much more efficient. So we're seeing that happen. And then there's a very big opportunity to deliver more healthcare at home, which is obviously the cheapest setting. So that's a really, really powerful trend we see for the next 5 to 10 years that we're excited about. And then on the innovation side, healthcare, biotech investing, that's what you get access to through investing in our space. One market that's really generating a lot of excitement for very big companies, but also potentially smaller companies that are developing drugs in the space, is obesity. So we're now seeing drugs that are delivering 15 to 17% weight loss over a year plus period, which can once you get above 10% weight loss, it can have a dramatic effect on people's health. And there are drugs in development now where the companies are hoping for 25 to 30% weight loss, which is incredible. So there's huge excitement about the potential of those products. And then just on a broader basis, I think there's lots of exciting things going on. And we look to the future, maybe in 5 years' time, we're talking about technologies that can provide cures for diseases that either previously were untreatable or patients had to be on medicines chronically. And so that would be very positive.
And just lastly, in terms of the strength of the team, I mean, there's so much going on in the healthcare space and it's changing so quickly. How important is the sort of breadth of the team to keep on top of that? Because as I said, it moves so quickly in terms of how this market develops.
Yeah, we've got a good sized team now that really helps on that. So we've broadened out that team just over a year ago with 2 extra hires. So, for example, we've got more effort on doing our own independent research, speaking to experts such as doctors, manufacturing experts, policy experts, and then we've also got a greater focus on emerging market healthcare now directly as well. So I think it's really, really important. I mean, ultimately, you have to have an investment strategy that makes that the challenge of covering the space effective. But then from there, with us being specialist investors, you want to go down into quite, in greater detail. And with having the strength of the team and also a lot of market experience, I think, hopefully that can allow us to do a good job.
Gareth, as always, thank you very much for your time and for highlighting what is a very interesting sector for the market at the moment.
Thanks, Chris.
And if you'd like to learn more about the Polar Capital Healthcare Trust, please visit fundcalibre.com.